What if I told you that the very thing designed to protect American jobs might be quietly draining your savings account right now? Not through some abstract economic theory, but through a direct and measurable hit on one of the most undervalued assets on the planet. Silver dropped this week, and most people have absolutely no idea why. But once you understand the three forces currently squeezing this market, you will never look at your portfolio the same way again. Welcome back to Silver Signals. I'm your host, Yali Jiang, and if you're new here, welcome to the community. This channel is where we cut through the financial noise and talk about what's actually moving precious metals markets and what it means for your money. Today, we're diving deep into silver's recent pullback, what caused it, and what the data is really telling us. If you haven't already, make sure you subscribe because we drop fresh analysis every week and you don't want to miss what's coming next. So let's start with what actually happened in the market this week. Silver had been on a solid run, building momentum and attracting attention from both institutional buyers and retail investors. Then it suddenly hit a wall, prices slid, and the headlines rushed to pin the move on a single cause. But the truth is that market shifts are rarely about one factor, and right now several powerful forces are pulling in different directions at the same time. The first major thread is tariffs and trade policy uncertainty. The Trump administration's provisional 10% tariff on global imports, along with talk of raising it to 15%, sent a shockwave through financial markets. When the tariff news first broke, silver actually climbed as investors rushed into safe haven assets. But once markets began thinking ahead about slower global trade and weaker growth, concerns about industrial demand started weighing heavily on silver prices. Nearly 60% of silver demand comes from industrial use, including solar panels, electronics, medical devices, and electric vehicles. If tariffs slow global economic activity, that slowdown directly pressures the industrial side of silver's demand equation. Trade uncertainty is unlikely to disappear anytime soon, and that ongoing uncertainty is fueling volatility in the silver market. When the global economy shows signs of stress, silver often feels the impact more sharply than gold because of its dual role. The second powerful force shaping silver's move is the strength of the US dollar. When the dollar rises, dollar-priced commodities like silver become more expensive for international buyers overnight. A stronger dollar effectively reduces foreign demand even before the metal's spot price changes. This recent pullback can be viewed as a corrective move driven largely by currency strength rather than a collapse in long-term fundamentals. Now I want you to reflect on your own position for a moment. Are you currently holding silver as part of your portfolio, or are you still waiting for what feels like the perfect entry point? Many investors hesitate during pullbacks, unsure whether they are seeing the start of a deeper decline or a temporary pause. Understanding the broader macro picture can make the difference between reacting emotionally and positioning strategically. The third thread is consumer confidence and persistent inflation anxiety. Recent data showed consumer confidence ticking higher, but households remain deeply concerned about rising prices and the cost of living. When inflation fears grow, investors typically look toward hard assets like silver as a hedge against eroding purchasing power. However, if central banks respond with aggressive rate hikes, higher yields and a stronger dollar can temporarily pressure metals that do not generate income. Geopolitical tensions also add another layer to the silver story. When global uncertainty rises, energy markets and precious metals often react as investors seek stability. Gold and silver have historically benefited from periods of geopolitical stress because they carry no counterparty risk. That fundamental characteristic continues to support their long-term appeal regardless of short-term price swings. Now here is the key insight tying everything together. Tariffs are inherently inflationary because higher import costs are often passed directly to consumers. As prices rise, the purchasing power of cash quietly declines, even if wages do not keep pace. The same policy contributing to short-term pressure on silver may actually be strengthening the long-term argument for owning it. Inflation erodes paper wealth over time, while tangible assets like silver have historically acted as a store of value. We are watching macro conditions align through trade uncertainty, currency fluctuations, geopolitical friction, and expanding industrial demand from clean energy technologies. Short-term volatility can be loud and unsettling for investors, but the longer-term structural forces supporting silver are becoming clearer with each passing week. So here's what you should take away from today's discussion. Silver's pullback is real, but it is not necessarily a signal to panic. It is a signal to understand the mechanics at work. Tariffs, dollar strength, inflation dynamics, and geopolitical risk are interacting in complex ways that create both pressure and opportunity. Investors who look beyond headlines and study these underlying forces are often the ones who position themselves for lasting wealth. If this breakdown helped clarify the bigger picture around silver, make sure you like this video because it helps more people discover this analysis. Consider subscribing as well because the coming months in precious metals could prove to be some of the most significant in years. Staying informed during volatile periods is not optional if you care about protecting and growing your wealth. I'm Yali Jiang. Stay sharp, stay informed, and I'll see you in the next one.